Okay, hello everyone, and welcome to Marley Live. By the way, guys, if you're listening to this, we're just going to be doing general markets, so general market update, and I'm going to be answering some questions. I realize that some people are still struggling with some concept, which is normal, so although it might be obvious to some people. So the mentorship is coming to an end this week and everything, but that doesn't mean that I'm abandoning anybody. No, I'm not. We're still gonna be answering questions. We're still gonna be um, giving out good points. The reason why we struggling or really trying to make people understand more than just basic, have a more than just basic knowledge is because when we make calls, we don't want to spoon feed people, right? It will be easier for us to just say long here, short there. But when we do that, we want people to know, appreciate the value. We want people to also say, okay, yeah, okay, I wasn't paying attention to that. Yeah, exactly. We want people to challenge us and say, oh, boss, why are you long in there? I was looking at this, and don't you think this? Don't you think that? So that is the reason. But a lot of all those things is coming in the future. But I just wanted my community, my people to be well prepared. All right. Okay. So now I'm going to start with analyzing. I just made a video about yesterday's YM short where I posted a little quiz and somebody won a prize. I don't know. I'm not involved in that, but it was kind of fun. So you can see my chart. Can you please confirm that you can see my gold weekly? Is it on a weekly time frame or daily time frame? Let me make sure that yeah, it's cool. It's cool. Did not say why. You saw that you said there was somebody doing some renovation there. It's cool. It's all this whole thing is recorded, so no issues. No issues. Okay, weekly. Yeah. All right, you got that right. Let me just move this mic. This shit is gonna be. It's just gonna be on my way. Okay, let me sit properly. All right. So what will be I'm just gonna spend like 2 minutes on each topic, okay? Starting from I still have a tiny position left on that shit. All right, it's still going. Anyway, guys, this was a trade from yesterday. Like I said, it's inside that IFVG area. So they see a tiny position, and stop loss has been. I re-entered, by the way. I mistakenly closed it, and then I just jumped in and took a snap when I saw it coming back into this. Look at this. This is what we call IOFED. When your price goes back into a fair value gap but barely going inside. All right, so this is institutional order flow entry drill. So there's an order block here. Enter right here, put your stop loss here. You don't have to worry that price is coming back here because price already tapped into this fair value gap. So if you didn't enter here, this was your second shot, and then you will be targeting that Marley box IVG thingy that I pointed out earlier, and potentially coming down here. These are all liquidity zones. All right, so retail, we call this some sort of trend line stuff. You say touch it. They call this trend line, but we see different things. This is an OT right here, and this is a potential yeah, maybe not this, but so if you take this, you go like that, you have your OT, so you don't have to rely on this retail stuff. Okay, anyway, I digress. This is not what we are doing. This is we're going to analyze. Let's go to the weekly time frame. So now I'm not going to talk about taking levels because that is basic understanding right now to everybody. So we're going to be talking about bias because this is a contentious issue. So let me know if the chosen topic is is what you guys prefer, or if you want anything specific. Okay, so just put it in the chat. But until then, I'm gonna be relating. I'm gonna be talking about buyers specifically. Okay. So here we can see clearly. Let me just use something to illustrate. Now using the weekly time frame, you can see without a doubt this is a clear downtrend. There's no doubt about it. This is a clear downtrend, and then it was broken somewhere up here. Was it even broken? You can arguably not really. Okay, so but right now though, you could say that we have another uptrend right here. So the trend in this particular one is going up. This is an uptrend to potentially take out this high, which you already did. Let me just point it out. So taking out this high. So now when you identify, okay, this is a potential uptrend, right? This is a potential uptrend. The next thing you do, you locate your next swing point. We have one here. We have another one here. I'm just going to use what I use just to illustrate this. I'm going to call it buy side, just so you know, just to have context. All right, so hence we are going up. You will be locating your next buy side liquidity. The initial one was this. That is where we are right now. So we're struggling to break past this point. Okay, so retail, we call this, they call this resistance. So, and those that is trading trend line would definitely have marked something like this and say, oh, touching, oh, it didn't even come here. Okay, came here and take out this swing low or swing failure pattern, and then we go, okay, so now we're going to short when it touches the next. So they would have been drawing all these lines up here and this line. They will just be trading those. So basically they ping-ponging between this channel. So this is what we call ascending channel, right? So it's going up. Okay, this is an ascending channel. Retail stuff, we don't do retail, so I'm just using it as context. All right, so point is, if you were to add your retail and your SMC, you would know that this is a potential shorting area. Okay, point is that, second point is that now you know we are in the trend is going up. We're in an uptrend on the weekly. Remember the time frame. On a macro time frame, we are bullish, so you trade according to the trend. Like they said, the trend is your friend until it ends, right? So the trend is continuing, so why fight the tide? Of course you can take a short. We don't enter trade on the weekly. We are not institutions. I don't know, maybe you do. I don't know. Point is that you can be longing and shorting, but you have to be aware of what your trend is, your macro trend, because anything you're doing will be subordinate to the macro trend. What do I mean by that? On the weekly, if you are bullish and then you are shorting on the 1 hour, 2 hour, or 4 hour time frame, even the daily, you know that you are only shorting to a temporary point of interest on the lower side, because the entire tide is going up. On the weekly, you want to expect each weekly candle to close bullishly. So what do I mean by that? If you look at this trend, majority of the candles is bullish, right? My white candles are the green candle on most people's chart, and then the gray candle, or this, what color is it? You know what I mean, is the red candle. Okay, so most of the community members have theirs like this, and I love it. It makes things easy for us, so you don't have to have yours like that. It's not a quote. So here you know that if you are shorting, it's just a temporary short until something else changes. Okay, so you know the trend, you have identified the trend. So now you're longing according to the trend. You're going to the correct direction of the. It's like you're swimming along with the current, right? If you're going this way, you're focusing on going back. It means like you're against the tide. You know, you're swimming against the current of the sea, of the river, whatever, and you're gonna have difficulties. You're probably gonna get sliced. Okay, that trade is still going. Where is it? Where's my US 30 shot? I don't know. It disappeared. But I can see on my laptop here it's still in profit. It's still keep going down. Point is that now, when we take this buy side, you would have taken your profit or something, but you would have also identified this point and this point. So these are all buy side that you will have marked on your charts. If not marked, but be aware of it. As you can see, I didn't mark them. I'm aware of them, but it's kind of stupid because I think I have to start marking this higher time frame levels out also. But of course, this is why we have this. Let me see if we have it. Yeah. See, I have monthly. But sometimes I don't put this. I just work with naked chart. It's easier for me that way. All right. So now that we have that, this is what you will be aiming for. That is bias for you. Okay. So you're going to ask yourself before this mentorship, before this. Hold on, I'm just going to read the chart. Here's bias and narrative, but if we could also talk about IOFED more. Yeah, I can go back a little bit about the IOFED. Where was I? Yeah, by the way, before this finishes, I'm going to walk you through. I think this video, this mentorship should be focused on bias and the questions I ask myself and my entry time frame and exactly how I go through it, okay? But first, let me just explain these things. So you would have identified these points of interest, these swing points, and as well as the sell side swing points, okay? So in that situation, you would have called this sell side liquidity right here. You mark it out. Then another one here. You could put this like all the way from here to illustrate that there is. This means that if price come back here, it's likely to take this. So you take the lower part because this is liquidity right here. If you put it here, you will forget that there is another one here. Okay, so it's better to just, because this is a situation where you put your relative equals. Okay, those of you that have watched the initial video, you will know what I mean. So this is where you put your regs, right? So you could do this and then just put that instead of marking that, instead of using this one. Okay. All right, so that is how you trade. That is basic. That is the basis of your bias. And then we go to the daily. We see what we see. We still see the same thing. We're going up. And by the way, while you are here on the weekly, you will be looking for higher time frame or macro POI, point of interest. What do I mean by that? You're looking for PDAs on a macro time frame. So something like this weekly fair value gap, which has been tapped into initially and then rejected. Okay, so again, this is some kind of IOFED here also. To answer what Paul said, let me just IOFED, institutional order flow entry drill. That's what ICT called it. I didn't came up with it. Though this is a little bit too much, so I wouldn't call this IOFED. IOFED usually is when you see a fair value gap like this. This is a fair value gap, and then the wick, the candle comes inside tiny bit, a tiny bit. I will find a good one for you. A tiny bit. It wouldn't even go to the first quadrant or second or third or fourth. It won't even go to the middle. It won't even be. You could say if it comes into, it's like something like this. This is a little bit too much. So when it taps into it a tiny bit, that is IOFED. All right. When you see that, it means that okay, it didn't even have enough strength to go into it. It means that okay, this downside is probably going to be more. It's probably stronger than you initially thought. So which is one of the reason. Where is it? I was it a 15 minutes time frame? What was it? Was it 5 minutes? What I was analyzing before, was it 2 minutes or something? On US study. What I was explaining before. Okay, so when you see things like this, you can jump in. When you see things like that, you can jump in, and yeah, basically that's how you do it. What is it? So you look for those sort of things, and if you have a higher time frame draw, and then you know that price is going to keep going up. Every movement here is just a tiny retracement to continue. Consolidation, retracement, continue. Now there is news currently going on right now, I believe so. 2:30 my time. So I think there is some hind going on. Anyway, back to this. So this is how you be anticipating it. You see, okay, there is a higher low here, and then you know, okay, price is going to come and take this one out. So here you would have identified this, and now this weekly fair value gap is almost filled, if not properly filled, right? So let's see what we can see here. Put the magnet on, and then what is it? Okay, it just left it by a tiny bit, a tiny bit. So this is a draw. It doesn't have to fill it fully. You're just waiting for price to come in here, and then you wait for a weakness or some form of a reversal, right? So although it could be challenging, because when this candle tapped into here, and then we start seeing a sell, then this candle, we already have a fair value gap here, and then this candle tap into it. Sometimes you would think, okay, this is already done here, and then we're going to see a reversal, but the trend is still continuing. So you just tap to fill this weekly fair value gap. So as this is happening, what you would do at the end of every week, you do something like this. Okay, now we are going to, because nothing goes up forever that doesn't come back down. So now let's analyze what happened here. So this is going to be our first lesson on PDA entries, using higher time frame PDA for our entry. Okay, shall we? You have to comment if you're understanding what I'm saying, because I'm watching the chart, or if I should explain something. So right now we are going to look into this weekly wick, how we could have gotten an entry here. That's a really good shot, guys. It's still going. So we're going to focus on this point. All right. Yeah, understand. Okay. So this was the, let me move this shit. This was, hold on, it's a weekly fair value gap. We're just gonna write it, fair value gap. But this is a weekly fair value gap, guys. Okay, so remember, it's a weekly. I don't have a template for that. So if we go to the daily, we can see even on the daily we still have a fair value gap. So now we have a real macro. So we're waiting for price. We're waiting to see what price is going to do. Now if you look in this place, this is, you already identified this. So during these days you're anticipating, okay, this is a weekly level. All right, now let's see what is on the other side. So what do you see? Let's draw it. Can someone tell me please what I'm looking at? You want to know how to frame your entry and trust your judgment and what you're trading? Oh, shall I enter or shall I not? Oh, I have to be confident. Yes, I've been there, guys. So can you please tell me what I'm looking at? Exactly, BPR. So right now you came all the way from a weekly fair value gap. That is also a daily fair value gap and a BPR right there. So right now you're telling yourself, okay, I have like, okay, 3 confirmation. Okay, this is a strong zone. It is a weekly and a daily fair value gap. That is 2. And then it is a daily BPR. All right. So what is a BPR? Like I was saying to Dinas a few days ago, I said, to me, they call it a balanced price range. I call it UBPR, unbalanced price range, because it is not balanced until price comes in it, tap into it, trade inside, and then leaves it. Then it becomes balanced. They don't teach it like that. I teach it like that. But we just call it balanced price range. But remember, it is an unbalanced price range. Remember that. Always have it in your head that when you see something like this, you just wait. Okay, I'm just going to wait for price to come in here. You might not participate in the market within this day, like Friday, whatever, 1, 2, 3, 4, 5. On this, you could have participated in this, and this probably depending on your confidence and your level of risk tolerance and money management. You would have just taken this, and you'll be done for the week. You don't have to trade every day. Okay, so I was telling brother Dinasio a few days ago. I was like, this is the type of trade, but not this particular one, something else. I was saying that there are trades that we call bet the farm, that we go balls deep, and from this month, from this July, everything is going to change for the Marley cruise. We're going to be doing some really hefty stuff, all right? And which is why one of the reasons I'm taking this mentorship again up notch, because you guys need to be on par. I ain't going nowhere without you. That's how I say it. But you have to be willing to be there with me, otherwise I'll just leave you behind. No offense, but I ain't got time for bullshit. All right, so now on the daily time frame, you take this again, you mark it out. Let me move the magnet. So you will get your what is it? I always struggle to find my template. So you know now for a fact that, okay, what you're doing technically, you're stacking, okay? So you're trying to see. So my stacking is, to me, it's not just about confluence, it's about what PDAs do I have there, and how do I grade them, which one has priority. So to me, my BPRO here has priority. Why? Because because I know what a BPRO is, which is, in other words, UBPR, all right, unbalanced, okay? I know unbalanced meaning that price is going to come in here, touch it, trade into it, and then leaves. So I'm putting priority on my BPRO. I didn't print it here, but it's the same thing. It's the same thing, all right? And now I have OT, so I have like 3 or 4 confluences here, and I've stacked all of them, so my confidence is growing. Another reason why my confidence is growing highly is because there was a consolidation here. We move, and then what do price usually do? Price usually go from discount to premium, right? Yeah, from premium to discount. So from this last swing point to this swing point on the buy side, creating a swing point here, price is coming down. So my entire area is inside a discounted zone, all right? So this is what you'll be looking at. Say, okay, price is in the premium, it's in discount. I have my PDAs all stacked up. Okay, my confidence is growing. All right, I think I just got a little bit richer. I'm probably taking the Wi-Fi out on the day today, and I'm not even really trading. So guys, going back to this trade, it's still going, guys. It's still going. This is what you get from Marley. So if we're gonna be calling this live every day, you guys should let me know if you want. If you guys want us to be calling this, we called this yesterday, from this somewhere around this area, I don't even remember. So if you're watching this, this is what you get. So back to this. So I know the trend is up. So I think everyone has this. Everyone has all our templates. So I know OF. You don't have to do this, but I will encourage you to do it, so you see these things, anyone can see that this is an uptrend. But when you see, you don't have to put it close to the candle, you just put it somewhere like this. You just say, okay, order flow is bullish. So when you see this like this, is bullish, and then of course when you take and then when you take it the opposite side, then it's like a downtrend, all right? It just reminds you of which side you should be trading, okay? I use it myself sometimes. So that's that. So now price tap into our higher time frame point of interest. So what we're going to do, we'll go to the 4-hour, okay? You go to the 4-hour, you see this happening. You're watching this, okay? This is automatically, this becomes this is the area. You join this is the area. So I'm just going to no, leave it for now. So this is your area, all right? You're watching. No, let me move the other boxes so we don't get confused. Good. So this is the area. Now, what do we have on the 4 hour? We have this, right? Sell side taken, 4 hour fair value gap tapped into, filled to the brim. And if you're paying attention, you will know that this is some kind of a Marley breaker right here also. Although we prefer to use it on the daily time frame, classic what you will call support turn resistance. Okay, so this is a Marley breaker. So create a template, call it Marley breaker. All right, so we pass it with displacement. Remember, you see there's a Jesus candle right here. This is displacement candle going up, and now we are coming back to feed that displacement. On rare occasion, will you see that price just come and displace it the other way, you know, because let's see, what do we have on the left side? Again, we have some form of balanced price range, but I think we also have a volume imbalance. Let me see, is it here? Let me see what is here. So this is some 4 hour, we're on 4 hour time frame. This is on 4 hour volume imbalance right here. Okay, I'm not sure what I'm looking at right now anymore, but all right, it was totally on the other side, so it doesn't matter. I'm just going to remove it. Okay, point is, price came in here. We already know this is the area we want to analyze. So we see price on the 4 hour doing this. Go to the 1 hour. You might analyze the 2 hour time frame also, but we don't use it most of the time. We don't. So we go to the 1 hour, and then you see this. You are watching this. Okay, price came in here. Here you have your sell side taken. You see this happening the first time, sell side taken here. So again, sell side taken. Now what you will be thinking, is that, okay, we are just having lower lows. So this is probably going to continue. Okay, this is taken here, sell side taken here, boom, sell side taken here, boom, sell side taken here, boom. Okay, probably this is going to come and it's going to continue, so you will be scared to enter. You will only be scared to enter because you did not identify this zone properly. You did not come all the way from the weekly time frame. Hey guys, does this make sense? Please let me know. Otherwise, it seems like I'm just talking to myself here. So far, what I'm saying, we came all the way from weekly. We're doing buyers, and then, all right. So this is exactly what happens. So if you did not analyze it the way I just did, or similar to that, when this is happening and then this is happening, you will not trust your long entry. You will not be able to make this move. You will think we are just having lower low, it's downtrend. Yes, again, if you remember what I said, let me take this out on the 4 hour, and I think if we go to 4 hour, you will only see a downtrend. You will only see downtrend. Okay, we are bearish. We are definitely bearish on the 4 hour. Okay, and then you go to the 1 hour time frame, extremely bearish. So when you're on the 1 hour time frame, you are looking at this, you'll be like, oh shit, okay, we are definitely bearish. We are going lower. We keep making lower low and lower highs. All right, but you did not identify this zone. I just have to stress that point out, because this is where most of my students struggle. They don't know, even if they see the buyers, they cannot frame an entry. When I mean they cannot, not because you cannot, but you are not confident in it. Some of you that is in this live session right now has that problem, and I understand it's normal. So when this is what we're touching, that's why I keep repeating myself. You have to identify this area, and then as price touches it, I'm just going to move this. It's clouding my what I'm doing. How do you do that? So now you see sell side taken multiple times. All right, sell side taken here, sell side taken here, sell side taken here, sell side just keep taking. That is what it does. It's going to keep doing that. Argo is going to keep doing that until it comes into the higher time frame point of interest, POI. All right, this is your HTF POI. Okay, so now that we established that, now we have come to this point. So now you're just going to wait for to see, you're just going to wait for the market to show you. You don't do anything. You're going to wait for the market to show you what it wants to do. Does it want to continue going down? Because it has come into our box here. Now it has gotten our interest. Meanwhile, before then, you would have put an alert here. Me and Dinasio, we just started something yesterday, and maybe we're going to introduce it to others later if they also have similar problem. So you're going to put your alert here, and then as price is touching your alert, you just keep going inside to see what is happening. Okay, I encourage all my students to have this, to have the premium trading view, so you have, or you can have like 6 layers, so you can watch your daily 4 hour, 1 hour, 15 minutes, 5 minutes, and 1 minute time frame simultaneously. In that way, you don't miss a beat. All right. So price now coming to our POI, and we see it in the 1 hour time frame. Okay. Now, what you want to be doing in the 1 hour is you waiting for sell side to be taken. What we're looking for, we're having a markets, what we call smart money reversal, SMR. All right. This is a smart money reversal right here. Buy program. Okay, so you have that sell side taking. Once that happen, happy days, you'll be watching. Okay, sell side taking. Now you're watching, you're seeing price is doing this, is doing that, and then it went up. What you want to see is a break of structure, and then with displacement, and then you enter. Okay, so price is doing this, is doing that, and then you can go to the 5. If you want to enter on the 1 hour time frame, here there is not a proper entry. I don't really see anything here. Of course, once this what's it called, there is a market structure break here, right here, market structure shift rather, MSS. We have an MSS here. So once this displacement happen, yes, you could enter, you could just market yourself in, and then just target this, target this, and then off you go. Or you could have waited for this. Again, if you waited for that, that would mean that you're entering around the same. When you see a fair value gap here, look, you see, okay, if the area has been acted as some form of resistance, there you have a Marley breaker right there. Okay, that is one way to look at it. Another way to look at it is that you have a low, a high. You guys already know where I'm going with this. A lower low, a break of that high, and what do we have here, guys? Exactly. Oh no, I totally ruined this stuff. Now I have to go and, yeah. So it is a huge one, but a breaker nonetheless. And what do we have here? This will be your entry. So you have a breaker, a bullish breaker right there. Where is it? You have a breaker right there. Boom. This is just you, because you know we are trading a higher time frame macro, not just a higher time frame. We're trading a weekly or perhaps a monthly. This is a macro point of interest that we have narrowed down to this level of 1 hour. When you have this, you know we have come all the way. We came all the way down. This is going to be tagged. Why do you have confidence that it's going to be tagged? Because weekly is bullish. The macro time frame is bullish. We are trading the trend. We are trading the 1 week through the lenses of a 1 hour candle. All right. We have we see what was happening in the 4 hour time frame, and now we go to the 1 hour. We see, okay, well, this is taken. All right, sell side fulfilled. This whole downtrend has come to a stop for now. All right, I'm just gonna wait for something, for a sign. Now this is many hours. You don't have to participate. It is hard, trust me, I know. I know, because I struggle with it. Everybody does. Okay. So right now, within the 1 hour time frame, you would have drew this out. This is a breaker. Okay. After, when you see this market structure shift MSS here, you could jump in inside any of this. You could, because of this, but you want to see some form of stuff happening here, you know. But if you take this though, from this swing low to this swing high, you can see its price didn't come into discount. So there is some form of this is where I prioritize other PDAs. Like I will use my breaker here. Okay, this is where it comes in handy. This one, so would enter here. So if you use the Marley breaker and then you have it attached to the traditional breaker here, which is this red box, you have everything for you going. Then you could have just entered on this one, but we want to frame to go lower to see what is happening. Okay, remember we are here now. It came into this place. We're looking for entry. We want to long. Okay, so now we'll go to the 15 minutes. I don't use 30 minutes much, but for argument's sake, let's just see what we can see. All right, so this was happening. This has already happened. Okay, price tapped into this fair value gap, rejected a little bit, and then it went up. So from here to here, perhaps you got yourself an OT. Oh shit. From here to here, not entirely. But what you would have done is this. You will know this is an order block, and then this is price went up, price came back into it, tap into this. You could have entered in this order block. This is just another thing if you have confidence in it. But for me personally, I would like price. I like when price leaves that area, because this is some form of consolidation. This is a lot of chop. Okay, it's a little bit hard to phrase to frame an entry, especially for like ICT call it neophyte or something, like newcomers. I don't want to say noobs. Most of you guys in my mentee are not noobs. You know, so sometimes me personally I still struggle with, especially because I trade a lot of pairs, so I will avoid this. However though, I will take note of this candle, which the price came into later, and tap into this area and then left. Okay, so that is 30 minutes. I don't use 30 minutes much. So now let's go back to the 15 minutes time frame. So this is the same thing. Price left, took out this buy side. It didn't take this one out. So when you see that price didn't take out, it took out this one. It could have as well taken just a few tick, right? And then price started descending. Now you might be thinking, oh shit, it's probably gonna go down. It's gonna go down. So you probably jump off here. If you ever took a shot, along here, you probably already, oh, okay, it's gonna go against me, and then you jump in, okay, and then you short in, and then price started doing this, and then you jump off again, and you keep jumping in and off. I know, because I have done it. So, but if you remember what you are trading from a higher time frame POI. Okay, that is what you're doing right here, guys. I'm emphasizing this area. I'm emphasizing this point. I keep repeating myself because I want it to stick on your head. Okay, guys, that's what I want. This video is recorded, and you're gonna have to watch it until you master these things. Okay, assignment is going to come on this. So anyway, back to what I was saying. Yeah, and then you just be waiting to look for a proper entry. Right now it's a chop. There is no significant displacement, although this is a displacement. This, I've said it many times, displacement is not one candle, although it's just meandering. What you want is what we call low resistance liquidity run. Okay, low resistance, this is low resistance liquidity run. All right, LR, low resistance liquidity run, or high resistance liquidity run. So this one was sort of like high resistance because it's not just one way. It's chop a little bit, chop around, did that. You want to see something like this, energetic runs. Okay, so price wasn't done with whatever it was doing here. So the here, somewhere here would have been a better entry. See this displacement, watch this candle. This basically telling you that, all right, my business here is done. This one was the first sign, because it didn't, why didn't it take out this low? It doesn't have to. It doesn't have to take out, no, we don't need to do that, because this already did the damage all the way here, right? And then this one, it just came, this one came and take this one out, tap into this other block, and then go. And when you see this candle, the way after taking out this low, this is what I do, guys. When I see these sort of things, a lot of the thing I'm saying here wasn't taught to me by ICT. When I see a situation like this, it came back, take out this low, like relative equal high, relative equals. Again, this is where you probably mark your Rex. I told you guys to spend time learning part 1. Now everything comes handy. So this is where you probably mark your Rex. On the 15 minutes time frame, you would have identified this, okay, I have a rec here. So if price is going, you know this already did the damage. So if price is going to come back here, if this price is going to continue up from this box, this higher time frame box, it's likely not going to. The chances that it's going to take out this low is very slim. So you will identify the next big swing points, which is this and this, and they happen to be inside your relative equal lows sort of thingy right here. So you could take a initial entry here. Boom. Another thing you could do, when you see this displacement away from liquidity grab zone, I repeat, a displacement candle away from a liquidity grab zone, okay, that candle tells you that, all right, I've taken this liquidity, I'm about to move. This is the initial telltale, this is the initial signature telling you that it's I'm ready to go. Okay, you tap into this other block, take out the liquidity, candle closes inside it, the wick does the damage, the candle tells the story, aka ICT score. That is one of ICT score. It's a bunch of them. All right. Okay. So, and now it created a fair value gap here, and then tap into it, and then off it goes. So you could put an entry. This could be your entry, right? This fair value gap could be your entry. If you enter here, your stop loss will be here. Your stop loss does not have to be all the way here, but if you want to be safe, you could put it all the way here. Or enter here. See, it's a very tight stop loss. You are not worried about this. So you enter your trade all the way from here, and then this came back and retest this whole point. What was it doing? It refilled. Okay? Filling this fair value gap. So because you saw that this went, you could anticipate that, okay, a candle might come back later to refill it. It doesn't always have to happen. It doesn't always happen. And at the same time, what do you see here? If you look closely, what you see is a BPR. Okay, a BPR right there. Off you go. Now, I've shown you maybe several ways to enter without even going to a lower time frame. Now 15 minutes time frame, I just find you an entry. Okay, so we can go to the 5 minutes time frame, which is like one of my favorite time frame. Oh shit, sorry. I try to close my position, guys, while before going live on that on some of the trade, and my broker didn't allow me. Somehow I was not able to close the position because I don't want to be live doing this mentorship and then having a position on open at the same time. And I guess it was a blessing because price just kept, all the trade price just kept going my way. So now hold on, I just have to move stop loss more. So you guys should let me know if y'all want some live trading at some point. But I want you guys to be good before we start doing that. I kind of want to start bringing Marley stuff to you guys. I don't want, sometimes it feels like I'm holding out, but that's not the whole point. I want you guys to be as good as Marley crew. So all right, so while this was happening, now we're on the 5 minutes time frame. While this was happening, you can see the chop 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 here. So this, you guys have seen me say this is a area where you don't trade. So you've seen my annotation at some point. I said no trade zone. This is just mad. You see this happening in the 5 minutes time frame. Avoid it. Okay, and then up here somewhere, you got your market structure shift. Boom. Okay, MSS, and then price came back, tap into that, and then off you go. So we have had entries on 1 hour, 30 minutes, and then 15 minutes, and now 5 minutes. Okay, so do you guys understand? Yours truly, I just saw what you wrote about housewives and the multitasking, and yeah, you're not what's it called, Martha Stewart? Isn't that the lady they compare that usually do multiple things or something? What's it called? I don't remember. Hold on, guys, I have to plug my Mac. Okay, I'm back. All right, so does it make sense, guys? So like I said, this place was chop chop, no entry, and when you have your entry on the 5 minutes time frame, you will then be more relaxed. You don't need to go to the 2 minutes or 1 minute, and there you have it. Okay, very insightful. Yeah, that's good. When do you decide to move your stop loss? Well, because what you are trading here is not a scalp. Let me go. If you entered here, I wouldn't move my stop loss. Actually, if you entered here, you would have probably taken a TP here, okay, and your stop loss is still here. So you probably would have moved your stop loss slightly, and this would have taken you out. That could I could see myself personally doing that. But the best thing to do is, because you are trading the weekly time frame through 1 hour, the lenses of the lower time frame entry, you could have just left your stop loss intact. You might take a tiny position here and leave your stop and still leave your stop loss. The reason is this: if you take out the stop loss, the profit you're going to take out here might be equivalent to the stop loss. So even if you stopped out, so meaning that you will lose some money, the profit that you would have taken out would have covered for that. But if you take profit and move your stop loss here, meaning you take profit here, initial profit, assuming you entered here, right? And then you take your initial profits, your first, let's say 20% or 30%, you take it here and you move your stop loss, and then you get stopped out, then that will cover it. But if you leave your stop loss alone, maybe go take a coffee or something and play with your kids or whatever you want to do, and then you are not stopped out, then you are still in the trade, because this is a potential, this is the main swing point. Hold on, guys. What do you want? Are you guys at the pool? All right. Yeah, my family, wife and kids is asking me they want to go to the pool downstairs. Don't worry. So that is what I mean by, in situation like this, I think I will just leave my stop loss, and if it comes back and take me out, fine. I just know that, okay, my analysis was right. It was just another bad day at the office. Hey, it happens. Shit happens, right? So that is what I would have done. Hold on, let me read it. Exactly, that's what I mean. So did that answer your question? I would have done the same. Yes, thanks. Okay, I would have done the same. I always put my stop loss at next time. OB has to be strong though. You never go broke taking profit. Exactly, you never go broke taking profit. Exactly. And you have to understand the type of trading you are entering, you are going into. Is it like, okay, you see, this is what I meant by identifying your environment. Is it a ping pong, like a sideways market, or is it a trending market? So on the weekly, we were able to see that, okay, and the daily we were able to see that the trend is strong. It's not just ping ponging, right? So it was more a strong move going on. So those are some of the things that will allow you trust your entry point, that will allow you trust these things. Now, I just analyzed everything I did here was done without where the hell are my levels? Now I can't find my levels. Without looking at my levels. All right. So everything was done without looking at the normal levels and Marley levels or any of all those. Okay. And I didn't consult my indicators or NUOG or NDOG or macros. I didn't check my macros and any of that. So this is just a pure live action candles. By identifying, I'm going to do something. Hold on a second. I'm just going to create. I just got everything is brand new in my office, and this mic and this system is really freaking awesome. So I'm still getting used to it. Okay, so I'm gonna go back to let me just start from the daily. So everything was just done purely by looking at this, and this is also okay. This is also something that you should be able to do able to look at, just look at chart. There is nothing more beautiful than just looking at naked chart, just like this. Yes, this is the first thing you need to do, which is doing your levels. You do that, always do that, and then taking your Marley levels, or those that I used to call what's it called, advanced levels and stuff, or extra levels. You should always do that, always. And then there is something else I'm going to talk about later. There is another folder I want you guys to start creating called MTA. Basically means MTA. It basically makes Marley TA, Marley Technical Analysis. All right, you are a Marley trader. You don't have to be a Marley chronaut, so that where we'll be sharing certain things, you will just go there, do your technical analysis, and then you put it there what you want to see. This is where you speak to yourself. Okay, this is just an example of it. Okay, and then sometimes when I have one-on-one with some of you, I create a folder for that. That is not needed. So I have a folder for some of you guys, and I will be feeding those individuals from that. So let me go back to what I was talking about. So we're talking about ESL. So here you just appreciate the sheer beauty of these things. Like, okay, this is a naked chart. You should be able, just try to be able to just look at it and see what you're doing. Start from monthly is a little bit too far, but we use monthly to take levels, like to take the monthly levels and stuff like that, you know. So we have our monthly levels in situations like this. We just take a few, you know, like put one monthly there, put one monthly there, and like now you put one monthly here. Okay, so yeah, that's the main thing. I don't think I rarely draw out monthly fair value gap because it's just too broad of a space to be bothering about. Okay, so and then I'm going to do another tutorial at some point on how to do what you guys should change and those things, and how I want you guys to be doing it, or rather how I prefer to be doing it. Then you can do the same if you want to just make things a lot easier. In that way you don't have to have too many things printed on your chart and all kinds of crazy stuff, opening everything, you know. You just get mad doing that. All right, so that is exactly how I identify. That is me and my bias and narrative. Oh, let me speak about the narrative aspect of it. Yes, bias and narrative are sort of they are two different things, but they go hand in hand. Why? The narrative aspect is price doing, why should price do certain things? Yeah, you can see Marley breaker right there. Yeah, exactly. You will see you will see these things everywhere. You just have to be aware. Just like, okay, now that you know, you just have to, once you see it, you can't unsee it. Especially when you see these things and you look for it. Like I said in the beginning, focus on it. Just stare at it. Go in your chart and look for it. Hunt for it. Do it until it becomes too boring and you just like, oh, there it is again. All right, okay, what now? Okay, I need something new. Oh, there it is again. Until it becomes so boring, and then you just like, you know. Now this doesn't have anything to do with trading, but when I was poorer, sorry, when I was less financially independent than I am today, when I was living in Scandinavia and stuff like that, sometimes when we see flashy cars, we see like Ferrari, like all these rare Bugatti and stuff like that, people taking pictures, people mesmerized by it. I guess everybody, I mean most people are, right? And now here I am living in the hub of that. Every third car you see is a sport, a multi-million-dollar car. And then it's just like, how many pictures of a nice car you going to see? It just become boring, you know. So most people that is being mesmerized by these days are people that are coming here for visit, like tourists and stuff like that. They just like, wow. The same thing with partying, right? Now, like I said, this doesn't have anything to do with trading, But where I used to live before I moved here, the party sucks. So initially when I moved here, I partied so freaking hard that wow, one of my one of my crypto portfolio plummeted in within few days because I wasn't paying attention. All right. So the point is that there was just different way of partying here that it really blew my mind. Okay. But now it's just like I don't even do that anymore. It's just boring, and people that is coming to visit me and come, oh man, they do this, oh they do that. Look at those dancers, look at this. So they're mesmerized by it. But because I've been into it for a long time, I'm just like, what now? So the same thing with these sort of levels. If you know these things, all your PDAs, how to use them, you've seen it a million and one times, you've done it, been there, done that basically, right? It becomes sort of boring. Yeah, probably a stupid analogy, but you get the point. So yeah, back to narrative. Narrative is, okay, you know your PDA is here, right? Let me so back to this point. You know it's here. The question you'll be asking yourself is, okay, why should price go there? What would price be doing there? Where is price going and why should it go there? That is the narrative. Price is coming here to fill this gap, and then it did exactly, it chopped around, traded into this, inside this point, and then traded away. Now this range is not balanced. This is now balanced. Let me write it out. Okay, so this is now a balanced price range. I don't care what anybody else say. Before now, it wasn't balanced in my opinion. I don't give a shit about what people say. All right, so that is the narrative. Price is coming here to balance it out, to continue its upward movement. That's what I see. So yeah, do you guys have any more questions? So this is the IOFED thingy that I was saying before. I think it was Paul that was asking when price comes in a little bit. If you look at this now, you will appreciate that from here to here, this is the upper, and this is the half, and this is the lower. All right, in between this and this, you share it into two. This is the lower quadrant and upper quadrant. So if you look here on this one, right, arguably price was mostly okay, although it tapped into the second one, but hey, it barely did that. And even if you have to break that second quadrant into another quadrant, you will appreciate that price didn't even come into that one, so it went to the lower quadrant. So you could keep doing this and see quadrant inside quadrant, but you don't have to do that. I don't do that. I see it with my eyes. So point is that there's this fair value gap, tap into it a little bit, and then, so those are the type of signatures you want to be saying. I love you guys so much. I keep doing this even when I said this mentorship is over. You know what? I ain't gonna give up on you guys, man. Sometimes when I do one-on-one with some of you, I'm just like, oh man, I love doing this. My homeboy is still struggling, so now what? I'm gonna give it a little bit more time. So yeah, thanks to you, Dinacio. Dinacio was one of the reason I decided to, like, you know what, let me go back and sort of do this thing, you know. So yeah, when you guys have questions, you just, tears in my eyes, can't believe the mentorship is almost over. Yeah, but we're still here, bro. Paul, we ain't going nowhere. You know, we ain't going nowhere. Yeah, thanks. I appreciate that you appreciate it. Yeah, exactly, Dinacio. I'm looking forward. You know, we made that promise long time ago. We said it out of a joke, but hey, I'm gonna hold you. I'm gonna hold myself to it. I'm gonna hold myself to it. I was joking with an another student a couple of weeks ago when I was doing my office, and I realized how big it was, and I placed a seat close to my new seat and stuff, and I was just like, okay, holy shit, this is going back. I didn't take my profit. I'll probably close. And then I said, okay, this is enough space for I don't know, an extra trader and stuff like that. So yeah, Dina. So I'm looking forward to that when we live trading start. You want live trading? Live trading will start when you understand what I just did, and you can walk me through it. How about that, Paul? You know, I don't want you getting wrecked, on my account. I can't have that on my conscience. Ah, very funny. Sounds scary. But it's true though. I mean, let's see. Ole, you at work, you haven't said much. You usually say a lot of stuff. Don't want to get right. No, I don't want to. I had Ole and I had some plan a few weeks ago to do something but because of what I was doing, I just couldn't make it. And you guys know what happened to me because I was busy for many weeks, and I did a lot of FOMO. Actually, I'm in debt now to my what is it called, to my crew members, because I broke a lot of rules. And in one of my account, although it's a kamikaze account, I still should treat it like a normal trading account. I was taking stupid trades, really really stupid trades. I just see price run it down like this. I'm like, okay, run it down, man. Even if I was painting or moving things around, buying cables and trying to install monitors and whatever it is I was doing at that particular time, I was still, I don't want to say dumb. I wasn't dumb. I was making not so good decision by just jumping to trade. So I drew one of my account down a couple of $100, and I'm not happy about that. I'm not happy about the fact that I allowed myself to fall into that. So it's not about just about the money. It's the fact that I broke my own rules, right? So that is the point that I was mostly disappointed about. So am I out of this trade? It's still going. I remember moving my stop loss. Hold on, let me check. What was happening? Nope, my trade is still on. Seems so. Oh no, it's not. The retracement. Oh, it's closed. Hey Dinacio, you said something about AXS earlier today. You sent a chart or something like that, and I went to analyze it, and I saw what is it? I took a snapshot of it from it. What is it? Where is it? Down. Yeah. I used to trade this thing back in the days, but somehow it was it was weird for me. So when you mentioned it today, and I saw you sent me the chart, so I went in to analyze it. I saw, okay, so I just took a tiny snapshot going down. So I'm gonna go to the pool now, spend time with my family and stuff. So I'm gonna probably close all the, or just put I'm already in profit. I move stop loss to entry and stuff like that. So But yeah, it's definitely something to keep an eye on. Just like Ole was talking about Tesla or some things yesterday. But the point is, I don't want to, and I don't want to have so many things, going on. Um, you guys can absolutely do that, but I just advise, like, I mean, be better at what you're doing. You know what I mean? Like, be 100% good at one thing than be 10% good at 100 things, right? So, although the point is, once you know the structure, you know you know your analysis, then you can apply it to other market. However, one thing you have to understand is that the forex markets don't always move the same. All these market, all these pairs move differently. They have different things that is fueling them, right? So that is that. I mean, you see the 4 hour now on gold. This is what it's doing, but look at ES. It's totally tanking, right? So you have to understand the different scenario. And speaking of which, we're still keeping an eye on this, bro, right? So what is it? So let's see let's just touch on it a little bit here. So we're still inside that. Nothing much has happened yet. I thought OPEC was supposed to do something yesterday, or was it today? I don't know. So keep an eye. I think this is where you place your... I haven't placed any alert. I haven't done anything. So I'm probably going to go through yours again and then correct mine. Yeah. Was it here, somewhere here, right? I'm gonna watch your chart again and then, all right, yeah, somewhere there and here, yeah, exactly. And you should also understand that this and this US and they sort of similar, so I didn't have to do the same on this. So just keep an eye. I use them against each other for divergence and stuff sometimes, so that is just for that. All right, guys, does anybody have questions? And Paul, I saw your post on Dixie. I think it was on the 15 minutes time frame. I don't know. Was it Euro USD? But guys, I have said this before. One of the simplest thing to trade is Dixie and Euro USD and Pound USD. These two, just the same with JPY, and these are the simplest thing. All right. When Dixie is going up, you short these. When this is going down, you long these. Basically, that is how it works. So that is Dixie, and this is no, not JPY. Euro is Euro USD here, like that. So you guys should let me know if you want more. Excuse me, guys, somebody's pressing the doorbell. Hold on. I will have to go again in a few seconds because I'm home alone, and I think there's a postman coming to deliver some package. So let me know if you want more input into any of these later. So basically, this is how you trade it. It's hola. When you see this is coming to touch this set side, and then the other pair, the foreign pair, is coming to take out the buy side, and you just short this and you long this, and basically that's just the basic approach to it. But of course you have to chart them independently. Yeah, it was Euro USD, this is Euro USD, but the same thing goes for Pound USD and stuff like that. So yeah guys, unless you have further questions. You see what happened here? If you're looking at ES, after taking out this buy side, we just did this. We did this for, I don't know, a day or two, and then we plummeted. Sorry, Dinasio, I know you don't like this, but I just find it funny sometimes because it reminds me of my naive days, right? Trying to trade, what is this? Is it called pennant or some shit? Yeah, trauma. Yeah, what is it called? Bull pennant or some form of pennant or something. And all those, and then they would tell you, yeah, it's gonna go this, and then it's gonna go that, but then the trend continues, blah blah blah, all kinds of shit. And then they would say, yeah, it was a retest of it at this particular point. It didn't retest any jack shit. You just come back to this other block, and there is a concept around it, which I already explained. We didn't trade this. We traded what we posted, what 420 posted, his analysis. That is exactly. So if I was to analyze that initially with just a little bit, so what he analyzed, let me hold on, I just have to check who's on my door. I don't know who that was. So what he analyzed initially was sorry, basically the same way I look at chart, you know. So because we've had so many sessions and he have taken everything, basically 90% of all my annotations, and studied them, so he was able to point all the tiny aspects, most of it out. So that's what I look at. That is how I analyze. So he definitely adopted my way. My new Ferrari is being delivered. I hope. The wife don't even want me to buy a Ferrari. I don't know what's up with her. She's like, she don't want me to die and stuff like that. Like I'm gonna die of a Ferrari. Probably. I don't know. Hey, I think it's a good way to die. You die on a Ferrari than die on a plane crash or some shit. I don't own the plane, so just dying with a bunch of people, I don't want that. Yeah, but no, I don't want to die yet. Gosh, man, this. So you guys have any more questions, guys? I would die in a Ferrari anytime. Yeah, totally agree. Totally. Okay, I think we'll call it a day, and this video will be posted along with the one I did earlier. So guys, if you're watching this video, the first 1 hour was the most productive. That is when we went to analysis, and this last part was just vibing. Of course, you wouldn't know that until you come to this last part where I'm giving the disclaimer, but then you already watch all the vibing that you don't want to listen to. So hey, good luck to that. But cool, this was, yeah, sure, Ole, no problem, man. It's recorded anyway, so everybody should watch it. And I'm gonna stop the recording now.